This is the disclaimer. All signals and trading opportunities we provide here are for educational and demonstration purposes only. Trading is very risky, so you should never trade with more money than you can afford to lose. And neither myself or Right Line Trading are licensed financial advisors, so we won't be giving financial advice. Okay, and if you have any questions, just go ahead and pop them in the question box there, and I'll try to answer them during the webinar. If there's something I can't answer, if you put your name and your phone number or your team's username in the chat box, Rory from Right Line will give you a call back and answer any questions you might have. I can answer most of the questions. If there's anything about subscriptions and things like that, then I can't answer that, but I can answer anything technically about the software and the results that we've had. Okay. And first of all, I'm just going to cover the strategies that we use in the room for swing trades and for intraday trades. So these are the strategies that we use for swing strategies. If you trade options, you'll probably recognize all of these, but we do straight calls and straight puts. Of course, we do a lot of those. We do straddles and strangles. If you're not familiar with straddles and strangles, that's a strategy using options. It's called a non-directional trade. We don't care which way the stock moves. We want it to move a long way. So we do quite a few straddles and strangles. Again, they're non-directional. You buy puts and calls either at the same strike price or just above or below the current strike price, and that's how you can leverage that. You typically can give these a lot of time because you're protected in both directions. We use debit spreads using weekly options expiration. Time spreads over earnings. This is something we use over earnings. It's the only strategy I use over earnings. It's a non-directional trade. We don't care which way the stock goes after earnings. We don't care what the earnings are. We just care about the price movement. And what we do is try to capture what's called the volatility crush. Volatility crush is something that market makers put into the option prices just before earnings because they don't know what the earnings are going to be. They don't know which way the stock's going to go, and they don't know how far it's going to move. So they jack up the prices on the puts and calls to try to protect themselves, and that's called volatility. And when the earnings come out and the prices then settle, they know where it's going, approximately, and they know about how much it moved. Then they take the premium out of there, that extra premium out of there, and this time spread over earnings is meant to capture that volatility crush and profit from that. It's a good strategy. It needs very specific criteria to take it. And I have videos, by the way, on all the strategies we use, as well as all the indicators that you're going to see. We use this weekly ATM strategy to capture premium week after week. This is done on neutral to bullish stocks, where we actually sell puts every week at roughly the at-the-money strike and keep a longer-term dated put at a lower price, a lower strike price to protect ourselves. Again, and I have a fairly detailed video on that. And then we do credit spreads to capture premium over a few weeks. So these are what we typically use for swing trades. You're going to see a lot of calls and puts and quite a few debit spreads. Those will be the most common. And straddles and strangles too lately because the market's been very, very volatile. And volatility is a great way to be taken advantage of by using straddles and strangles. Okay, now the intraday trade strategy that we've got two really very impressive strategies here. We call this the SPY super system for very high probability trades. Now this will work typically on the SPYs, the Qs, the IWM, the Russell 2000, or you can use it on futures or even stocks. And it uses in the money puts and in the money calls for very specific setups, right? Then we have this new strategy that we just developed since I developed in November. It's called the OOMCAT for high momentum, high volume trades. Very specific criteria for this that I'm going to go into. But this particular intraday strategy here is really extremely effective, and you'll see the results in that. So these are the two methodologies we use for intraday trades. I use it off of 5-minute charts, and of course the swing trades we take off of daily charts. Okay, one of the reasons I introduced this OOMCAT strategy, the new intraday trading strategy, is SEC has a rule called a PDT. Right, that's pattern day trader. What that means, if you're a pattern day trader, or if you don't have but $25,000 in your account or more, then you're limited to doing 3 intraday trades in a 5-day period. Only 3. So it's hard to do intraday trading if you can only do 3, because if you do more than 3, they're going to block you from making any more trades until a period of time goes by. So the reason I'm introducing this OOMCAT strategy is this PDT rule, which is 25,000 minimum right now, has been approved to be dropped this year. They're going to drop it down to about 2,000 to 2,500. They haven't really said exactly, but they have agreed that they're going to drop this PDT rule way down. And what that means is millions and millions, probably tens of millions of new traders will be suddenly gaining full access to intraday trading. In other words, all these folks that have $2,500, $5,000, $10 and $10,000 accounts and can't really trade intraday trades on options on stocks, or options on anything actually. I mean, they can do futures, but that's it. They're going to now have access to doing intraday trades. So it's going to bring a lot of new traders into the intraday realm, and to me that it's a big advantage for us, because with the strategies we've got for intraday trading, the SPY super system and the OOMCAT strategy, we're going to be able to take advantage of the new traders coming in here trying to intraday trade. And again, what we're saying here is these new traders are going to have access to intraday trading. That shift in number of people coming in is going to demand more fast, disciplined, momentum-based strategies to take advantage of all these new traders. So we're adding the OOMCAT strategy now to prepare traders for a far more accessible, far more active market environment. Right, so that's why I did this. I mean, I got a lot of people in the room using it now, but there's people that can't because they're limited by their account balance. So this is just you can learn this and be prepared for it. Okay, this is just a graphic of what's called the Compass Text Alert Service. The SPY Super System used to be called the Compass System. It's now called the SPY Super System, and we made a lot of changes to it and improved it. But we still call the Text Alert Service the Compass Text Alert Service, and this is where I send trades out to anybody who's on the alert service. Typically, 90% of them are going to be overnight type trades, swing type trades. Okay, now before I get into the actual software, I want to talk about something here, and I do this every webinar. So if you've listened to my webinars before, you've heard this over and over again. But it's very important for retail traders to understand what makes the market move, what's actually makes trends, breaks trends, etc. There's 2 groups of traders. There's retail traders such as myself and most likely everybody here. We're the little marbles down here. We're the retail traders. It's important to understand when retail traders making up the majority of the trading at any particular point in time, the market is not going to move. It's going to be chopped in chaos. Basically, you're fighting other retail traders, and that's not what we want. Right? So we don't want to be in there if the institutions aren't in. And when I say not in, institutions are always in the market. They're always trading. But there are situations occur when the institutions are lining up to move a stock or an index one direction or the other, either bullish or bearish, and there's a lot of them doing the same thing. That's what we want to find. So when the institutions are in the trades, they're driving the trend. This is when we want to be in there. We want to be in there because we can now follow the institutions and not have to worry about retail traders. We're just going to take our money from the retail traders. Now, institutions are made up of, I classify them in 4 different groups. There's investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, all the big investment banks. That's a big portion of the institutions. But you also have 3 others. You also have hedge funds, which have billions and billions of dollars to put into the market. Then you have pension funds. Pension funds are huge. State workers, firemen pension funds, police pension funds. There's just myriad of pension funds that are also part of the institutions because they have so much money to trade in the market. And the last would be mutual funds, and that would be funds like T. Rowe Price, Vanguard, billions and billions of dollars in these funds. And this is what makes up institutions. And our job to be a consistently profitable trader is to identify when the institutions are moving a trade and take advantage of it. And when they're not, we don't want to be there. We want to be in when the institutions are in. And take our money from the retail traders. We're not going to take any money from the institutions. Okay, so that's what drives the market. Now, this is a kind of a little, seems off topic, I guess, but this is a blackjack table right here. Here's a ace and jack of spades, nice blackjack, couple $100 chips. And what in the world has this got to do with trading options? And the reason I put this up there is a lot of people I talk to they tell me, they get discouraged because when they talk to their friends and they talk to their relatives, they tell them, you can't beat it. It's fixed. There's no way you're going to be able to beat these institutions. You're just wasting your money. It's gambling is what they call it. You're just gambling. Now, the reason I put this in here is because when I was much younger, much younger, I made my living playing blackjack in the casinos in Las Vegas as what was called a card counter. Right now, counting the cards, by the way, is not keep tracking every single card. You just keep track of the stock cards that are removed from the deck, and as the little cards are removed, the deuces through 7, if there's more of those removed than big cards, the advantage swings to the player, and vice versa. So this gave me a mathematical edge over the casinos by knowing when the cards were in my favor. When they're in my favor, I bet more money, play more hands. When they were against me, I just bet one hand minimum bet. Right, so that's how you get an edge over those. And I did this for a couple of years, full time. It's all I did. And that's how I made my living. But what I pointed this out is trading stocks and options is very similar in that without knowing what the institutions are doing, the trader doesn't really have a big edge. So in essence, they're gambling, right? So you've got to have an edge here, and having the SPY super system is going to give you that edge. But I want to point out something. When you're a trader, just like when I was a blackjack player, both of these require discipline and emotional control. These two things right here can, no matter how good you are or how great the strategy is, if you're unable to maintain discipline and emotional control, it's going to blow you up. All right, it's very, very important that you can maintain discipline, which means follow your strategy and only follow your strategy. Don't be distracted by people on any social media sites posting stuff about I'm buying this, I'm selling that. So you're going to stick to your discipline of using the indicators and the setups, knowing that the institutions are in them or not in them. And then emotional control. And this is a big, big problem for most retail traders. Emotions are run a lot of ways. I mean, you always hear that the market is driven by fear and greed. Two things, fear and greed. So yeah, fear and greed is a dangerous thing. If you put too much money in a trade, you're typically trading with fear and you're not going to trade well. If you're chasing a stock up, a FOMO, you're missing a stock, so it's been moving up, you can't take it anymore, you're going to jump in because you're losing all this money because it's going up. That's FOMO. That's greed. I mean, that's greed that's overtaking you. But there's also other emotions that you're going to be impacted by if you're not careful. One would be anger, having a trade go against you that you thought should be a good trade. That's revenge trading, trying to trade when the trade has gone against you. You have to recognize in yourself when these emotions are present and how it might be affecting your trading. And then besides anger, there'd be elation. You've hit 4 or 5 really big winning trades in a row. All of a sudden, you feel like you can't be beat, and you start jacking up the premiums that you put into the trades, how much money you put into the trades, and now you're trading with an emotion of elation. All of those are going to work against you. They're all going to work against you because when you're trading emotionally, you're not going to trade the way you should trade. You're not looking at just basic technical analysis. Okay. Now, the SPY Super System, which I'm going to show you here, this piece of software that I run it on Thinkorswim. You don't have to trade on Thinkorswim, but I run it on Thinkorswim. I call this my card counting system because this gives me an edge over the other traders, allowing us the ability to become consistently profitable. Right? That's why I have this in here. I relate this SPY Super System to the card counting system. It gives you an edge over the rest of the market. And the SPY Super System, in conjunction with identifying the best high probability trades, can lead to consistent profits. And what I mean here is you can have 4 or 5 trades that the institutions are in and they look good. What we do is identify the best one that's got the highest probability of success and trade that. Right. So that's why I put this in here. Okay. So in the room and on the alert service, a couple of rules to trade by. We trade the rest and skip the rest. And this is just kind of a quick way of saying only trade with the institutions in their direction, and don't trade when they're not in the trade. I mean, it's a simple thing, but this skipping the rest is really, I think, more important than a lot of people realize. If you bypass trades, and this recent period in the market's been like this, the trading has been extremely difficult. So if you can skip trades that are less likely to be successful than the ones you normally take, that's just like putting money in your pocket. And a lot of times, the best trade is no trade. And I know that people don't like to hear that, but I do this, I talk about this in the room all the time. And I look at the market during the day, and if the market's chopping and there's no direction to it, you've got to only take the very best ones you can find. All right, and the second one is our objective is not to make trades, our objective is to make money. And this is meant to keep people from retail traders from over trading. A lot of retail traders feel like if they're sitting in front of this screen, they consider themselves a trader, they've got to have a trade on all the time. You don't. You only want to have trades on when you have a big advantage. And again, does it really matter to you if you only make 2 trades a day and you make $1,000, or you put 10 trades a day and you make $800? I mean, it's the quality of the trade, not the quantity of the trade, that makes a difference. Okay, and maintaining discipline, and this is what I talked about a bit ago. Learn and follow the process. We have a process, and I'm going to lay out the criteria that we use to find these trades. That is the process. Maintaining discipline means follow the process. Don't be straying off and taking stuff that does not align with the criteria that you have to give you the highest probability trades. And it's very easy to get distracted. People are listening to TV. They've got news feeds up. They've got they're looking at X, and they're looking at people posting stuff. It's gonna drive you crazy, and it's not gonna work to your advantage. And remain patient. And again, I harp on this all the time. This is something that's really important. Please be patient. I start every day by saying, please be patient. Wait for at least the first 15 or 20 minutes before you start jumping into trades. You don't have any idea what the market's going to do in the open. It's just a big gamble to try to take trades at that point. The only time I do anything on the open is if we've got a trade that's in our favor. Maybe we've got a long and it gapped up overnight. I'm going to take the profits right on the open. Or a short that gaps down, I'm going to take the profits right on the open. Right? And I call them gaps of gifts. You get a gap in your favor, take advantage of it. And if you don't, you're basically trading out of greed. You think it's going to keep going up. When a stock gaps up or gaps down, the least likelihood for that stock to do is to continue in the same direction. It's almost always going to just chop around, or it's going to pop and gap and crap. It's going to go right back down again. Okay, so as a profitable trader, we need an edge. Obviously, I've got what I consider 4 edges here. The SPY Super System software telling me if the institutions are in the trade. This is main number 1. Second thing is we trade relative strength and relative weakness. Please don't confuse that with RSI, the RSI indicator. Relative strength means how is my stock moving in relationship to what the SPY is doing. All right, that's important. If the SPY is moving sideways or it's drifting down, and you've got a stock that's stacking green candles and moving up, that stock has relative strength. And vice versa for relative weakness. It's going to give you a bigger edge on that trade and a much higher likelihood to be successful. We trade with the market trend if there is one. And we buy near support and sell near resistance. This is really important. Trying to get in near a support level or a resistance level. Selling when you're near a resistance level, buying when you go through a support level or resistance level to the upside and you're coming down to it. When you're near support or near resistance, when you get into a trade at those levels, your likelihood of a loss is about the same, but the thing is, it's going to be a much smaller loss, because if you get in right at support and then the stock turns against you, you're going to get out. You just bought it right at support. Now it's gone down a little bit. It's trading below support. You get out, so your loss is smaller. Right? So that's why this is such an important criteria. Okay, the compass system, which is now called the SPY Super System. I'm going to show you the newest updated graphics we've got on the newest chart. It looks a little different than this, but it does this by identifying when institutions are driving the move and when they're not. That's what this does. The whole point of that is to identify institutions. It analyzes complex trading data and displays the results in an easily identifiable visual format. As you'll see, it just uses colors to tell us whether the institutions are bullish or bearish or neutral. And again, this visual element makes it possible for even new traders to find high probability trades. And that's really important, because if you're fairly new to trading, you're not likely to really be very good at technical analysis yet, because it takes some time. But this is going to tell you what the institutions are doing, and it's going to tell you whether you've got a stock that's a decent trade to take or not. Okay, and so we need to get an edge over other retail traders. As I said, we're only taking money from retail traders. Okay, so we're only taking trades that are being driven by institutions. I'm really harping on this. I'm focusing on this. We trade stocks that have relative strength or relative weakness to the SPY or the Qs, and we trade in the direction of the overall market trend. If you do these three things right here, you'll be head and shoulders above about 96% of the retail traders in the world. And how does it give us an edge? Well, our trades are going to be supported by institutional buying and selling. We're just following the institutions. That's all we're doing. When they're pushing the market up on big volume, we want to be there. We want to follow them. Will the stock going to be performing the index because we're using relative strength and relative weakness, and the stocks are moving in the overall the direction of the overall market. If there is a direction to the market, a lot of times there isn't. A lot of times it's very choppy. Okay. It's just the super system, the SPY super system. We've got a few of these. I'm just going to throw these logos, but this is the SPY super system. We're going to show you how we trade intraday trades on the indexes and on stocks. It's called the SPY super system. We're using in the money calls, in the money puts on these. Then we have what's called the institutional momentum stock system. It's the same as this, except this is not for indexes like the SPY and the Qs. This is for individual stocks. And the difference here is we can add relative strength as one of the criteria that we use. You can't really do that on the Qs and the SPY, right? And then I want to talk about the SPY super system. Again, we use it to trade the SPY, the Qs, and IWM as well as futures, right? The institutional momentum stock system, the one I just showed you here, uses exactly the same strategy, except it's using trading against individual stocks. You're using options for stocks, but it uses relative strength and relative weakness as one of the criteria that you can't use in the SPY super system for the indexes. All right, it might sound a little confusing, but they're doing the same exact thing. And here are the color codes for the SPY super system. We got green, it's pretty easy. Bullish strong, blue, bullish trend, red, bearish strong, and yellow, bearish trend. That's how we identify these. Right, so this is what the SPY super system on Thinkorswim looks like. This is basically a setup that you would see on your screen if you had the SPY super system, or if you're in my room, this is displayed all day long. I have the SPY super system up on the screen all day long. This runs on Thinkorswim, but again, you do not need to trade on Thinkorswim. I don't trade on Thinkorswim. I trade on Trading. You can trade on any application or any platform that you want, but this is where the information is going to be displayed so you can identify whether institutions are in the trade or not, right? And what you've got here is you've got the current time frame momentum. So if this is a 5-minute chart, this is the current time frame momentum for 5 minutes. This is multi-time frame. So on a 5-minute chart, this is looking at the 5, the 15, and the 45, and this is long-term trend, which I typically only use for swing trades, right? And what this is based on for momentum is this oscillator right here. This is a Laguerre, and it's modified. We've taken that oscillator and stripped out divergence. This is pure momentum. This is give us the best indication of what the institutions are doing. And here's your colors. Green and blue are bullish, yellow and red are bearish. Right, so these are the indicators that tell us what the institutions are doing. Up here on the 5-minute chart, these are our levels that we use for getting into a trade and getting out of a trade. We have 3 criteria, 3 setups for entries and exits. One is the VWAP here, the volume weighted average price. This is a major support resistance level that every institution uses. Volume weighted average price, the pink line. Then we have the 15 EMA, the 15 exponential moving average, right there. And then the white line, the 8 exponential moving average. Any of these 3 levels would be levels that you can enter trades on, right? And use as support when you're going up. One thing to note about the 8 exponential moving average, when it's trading above the 15, the trend is bullish. When the 8 is trading below the 15, the trend is bearish. So if you've got an 8 that's trading above the 15 and then it crosses down and you get the institutions coming in selling, that could be an indication that there's going to be some institutions selling coming into play. All right, and then we have another one here called market internals. This doesn't reflect the stock that you're looking at. This reflects the current direction of the whole market, right? What the whole market internals are doing. Taking all the volume on stocks moving up, subtracting all the volume on stocks moving down, and coming up with an indicator that tells us whether the overall trend in the market is up or down, whether it's bullish or bearish. And again, this has 4 colors. It's obviously green and blue would be bullish, red and yellow would be bearish. So green is much stronger than blue for an uptrend. All right, so that's market internals. One other thing to notice on here here's your candlesticks. The candlesticks obviously are normally red and green, right? Red and green. This, what I'm going to talk about right here, this is really important. Very, very important, right? Anything that has a white candlestick like this, white outlined candlestick, that's a green candle. That's a bullish candle, but it's got very high volume. This is very high volume coming into this SPY system right here, right? As this breaks out above the 8, the 15, and the VWAP right here, and you've got a white candle, that tells you that the institutions are coming in, and they're coming in with force, right? Really important. This high volume. This is for the OOMCAT strategy, the out of the money catalyst strategy for intraday trades. This is a key thing. You can't use the OOMCAT strategy if you don't have high volume candles. But this shows us that a high volume candle to the upside. The yellow is a high volume candle bearish. And then you have high volume candles bullish. That white candle is a high volume candle. And when you get stacked high volume candles like that, that is a real indication that the markets are coming in. Typically, you would enter right here on this candle as it broke through the 8 and the 15 for long. Notice that the institutions will go from selling to buying right there. So you buy it as it breaks above the VWAP. You'd ride it up for 3 or 4 candles, and then you get out right there as it flattens out. And that little move right there would probably make you $150, $200 per contract on the SPY calls, right? So let's keep this in mind, because these high volume candlesticks are really important. Okay, before I move into that any further, I want to stop here and do some Heiken-Ashi candles. And the reason I do is because a lot of people I know signed up because they wanted to hear about Heiken-Ashi candles. So we're going to talk about Heiken-Ashi candles. I'm going to show you some live charts with the SPY Super System with Heiken-Ashi trades or Heiken-Ashi candles from yesterday. Right, so this is the basic Heiken-Ashi candle setup. These are Heiken-Ashi candles. It says British and pound, Japanese yen. That was just an example I pulled. It doesn't matter. This could be Microsoft. This could be gold. This could be the futures. It doesn't make any difference. Could be the ES. Could be the NQ. These candlesticks that have flat tops like that, these are bearish Heiken-Ashi candles. And I'll recap this, but this is something you want to remember. Heiken-Ashi candles, when you have them on your chart, you're going to get a flat top is a bearish Heiken-Ashi candle, right? And you see how you have flat top, flat top, flat top. That's a bearish trend, a very strong bearish trend. Now they're gonna you can get tails on these, but you shouldn't have any wicks on them when you've got Heiken-Ashi bearish candles. And notice that each Heiken-Ashi candle starts in the middle of the previous Heiken-Ashi candle. Okay. Okay, Susan. Yep, we'll send you you'll get the video probably tomorrow, Monday, on that. All right. So this is each of these candles starts about halfway down the previous candle. Right. So this is a bearish Heiken-Ashi candle. Bullish Heiken-Ashi candles have flat bottoms. Right. Obviously, just the opposite. Flat bottoms. They can have wicks, but they don't have any tails. If you get one here, it's a little bit of a tail. Then it's not really a Heiken-Ashi candle, but the next one is a Heiken-Ashi candle. This would be no reason to exit the trade. Right, so these are Heiken-Ashi bullish candles. And unlike regular candlesticks, something to understand. Typically, when you're trading regular candles, if you get a big wick on top of a regular candle, it's actually considered bearish, because what that means is the buyers come in, they drove the stock price up, and then the sellers come in and they drove it back down, creating this wick. That is not true with Heiken-Ashi candles. Candlesticks, Heiken-Ashi candlesticks, like bullish with big wicks on the top, are more bullish than ones without it. Same thing goes for bearish candles. Heiken-Ashi bearish candles with tails on the bottom are more bearish than ones that have small tails on the bottom. Okay, so it's easy to mess that up if you're used to candlesticks. Okay, so this is a bearish trend. So I want to just show an example of, let's say we wanted to go long this particular stock, and we were waiting for a pullback to support, and then we want to grab it as it turns around and heads back up again. Right, so we're going to be looking for what's called a Heiken-Ashi reversal. And that is going from a Heiken-Ashi bearish candles to Heiken-Ashi bullish candles. Right, so this would be considered a Heiken-Ashi bullish reversal. Right, you've got all this candlesticks coming down. You got a bunch of wicks and tails here. Then you go to a flat bottom candle. That's a Heiken-Ashi reversal to the bullish side. Now the question is, would you take that trade? Right, and if you did, you probably would make some money on it. But I wouldn't take this, because there's one other caveat with these Heiken-Ashi candles. The size of the candles matter. The size of the candles and the trend you're in matter. When you switch from a bearish downtrend that's very strong you've got to have a candlestick, so some candlesticks that are as big or fairly close to being as big as the ones that created the trend. You don't have that here, right? You've got a big downtrend, and then you've got basically a Heiken-Ashi reversal candle, but it's small. So I wouldn't have taken that, right? I would have said it's just not enough force. I want to wait to see it. Now, if you took it, you could have got out up here and made some money. But here is your Heiken-Ashi reversal candle that matters, right? Because we switched to bearish Heiken-Ashi candle, and look at the size of the candlestick. But you got a big candlestick. Now this is a reversal from this trend. This was made mostly a bunch of noise in here, but this is a reversal from that trend with the flat bottom, flat bottom, flat bottom. So this is where you would take the trend. This is where you would ride it up, and this is where you would get out. When you start getting big wicks and tails and a red candlestick, that is your Heiken-Ashi reversal, right? And that's one of the major ways to use Heiken-Ashi candles, is to get into a trade early when it's reversing. Okay. And again, understanding the trends with Heiken-Ashi candles, we just talked about this. Here's this similar thing we've got right here. Again, here's the reversal that we said we wouldn't take, and then we take the reversal here. Now let's assume that this dotted line here, for example, is like the VWAP, and you want to go long as it breaks above the VWAP. Here's your Heiken-Ashi candle right here that breaks above the VWAP. This is where you would take the trade, as you break above support or break above resistance, and then you would ride this up. And you wouldn't be getting out here because this blue line is basically becomes your support level. Now, once you've moved into the trade and look at the stacked green candles you've got here, you're getting pretty far away from this this VWAP. So what you'd be doing is you're going to be watching this trade, and as soon as you start to see any hesitation, I likely would have got out right here on this candle, but you could have stayed in, but you're definitely getting it out right here. So that is your Heiken-Ashi reversal. That's the trend that you ride. That's how you get really nice trades. Okay. So the distinction of Heiken-Ashi candles: bullish Heiken-Ashi candles have flat bottoms. Bearish Heiken-Ashi candles have flat tops. You've got to know that. Bullish Heiken-Ashi reversals are identified by flat top Heiken-Ashi candles, followed by flat bottomed Heiken-Ashi candles. And there can be doji candles in between. They're not going to necessarily occur one right after the other. And again, bearish Heiken-Ashi reversals are identified by flat bottoms, followed by flat tops. Right? That's how you do Heiken-Ashi reversals. So what's the advantages of Heiken-Ashi candles over regular candles? Well, it smooths out the price action. It reduces noise. You've got a Heiken-Ashi candle is created by two candlesticks. Right? So there's two candlesticks creating it. It smooths out the price action, reducing the noise. It makes identifying trends much easier, as you could see in those examples. Improves identifying confirmation of trends and trend reversals. Very important. This is where I use it the most. And it helps identify potential exits when candle bodies shrink or reversal occurs. Those are your advantages of using Heiken-Ashi candles. Heiken-Ashi candles, one thing about them, why the reversal candles are so important is because there's two candles that make that up, the confirmation of that reversal is included in the Heiken-Ashi candle. If you're looking at regular candlesticks, you typically have to wait at least for two candlesticks to confirm a bounce. But you don't have to do that with Heiken-Ashi, because Heiken-Ashi is made up of two candles. Inherently, they are confirmation. Okay. All right. Now I'm going to show you a couple of charts here. This is from a platform I use called TC2000. It's a charting program and a scanning program, but it's easy to see on here how to use Heiken-Ashi candles. This is Uber. This goes back to like May 2023, but I want you to look right here around May 1st, right? And you see this trend down, and you see this gap up. It's very difficult to figure out where to trade this, because you're afraid that it's moved too far. And so these are regular candlesticks, and notice the gap here, right? Now we switch to a Heiken-Ashi set for the same thing. Is May 1st. There is a Heiken-Ashi bearish trend right there. See the flat top, flat top, flat top. And here is your Heiken-Ashi reversal candle. See how big that candle is in relationship to this? This is where you would have get in. So if you were going to take this trade off of a Heiken-Ashi reversal, you would have taken it on May 1st, right? This is where you would have taken the trade, and this is the move you would have got, right? Flat bottom, flat bottom, flat bottom, flat bottom. Notice something here. Gaps, no gaps, right? So this is where you would have taken the trade, May 1st. If you were watching the Heiken-Ashi candle form over here on this chart, This is where you would have taken the trade, right here, somewhere in this candlestick, and this is what you would have got out of it, right? And you would have got out right up here. That's a pretty big bounce. All right, so what I want to do here is I'm going to show some live Heiken-Ashi reversal candles off the SPY Super System from yesterday. So I'm going to bring up the SPY Super System platform. All right, so here's the platform right here. And I'm going to switch this over because I'm going to look at some daily charts for this. I can do a scan and take a look at some of those. This is, by the way, the scanner that comes with the SPY Super System. This is cascading up, cascading down. This can go on 5 minutes. It can go on daily. This shows you Heiken-Ashi. I'm sorry. This shows you stocks that have relative strength, stocks that have relative weakness, and these down here is there's two of these scans. These show you stocks that are bearish or bullish as a swing type trade. So if I was to click on this, by the way, it's going to show up on the chart. This is American Airlines with a daily chart right here. Look at the candlesticks. See those indicators, all red, bearish. See the high volume, very strong drop down here, move down in American Airlines. It becomes a prospect for a swing trade, short. So that's how you do. And also these are also daily cascading up. So some of these are going to look pretty good as well for swing trades to the long side. So that's just what you've got here. But I'm going to move that out of the way so we can just look at the candlesticks on the daily here, right? And just give me 1 second here. I need to look at some. Because I want to just pull these up live. I'm going to pull up some Heiken-Ashi reversal candles. I got a couple of other scans off screen that I can use just to find some Heiken-Ashi reversal candles. All right, so there's some stocks here that have that. And the first one I'm going to have is Marvel. So I'm going to look at Marvel. This had earnings, so it's going to look pretty good. This is a daily chart of Marvel, right? So nope, that's not Marvel. Sorry. Here's Marvel. All right, so here's the Marvel daily chart right here. Big volume, off of earnings, but notice something. You see how this is blue, this is bullish? See how this is yellow, this is bearish? That means I can't take Marvel as a swing trade yet. It does not, it had a Heiken-Ashi. Let me switch this to Heiken-Ashi so you can see Heiken-Ashi on here. Just change the candlestick type to Heiken-Ashi. Right, so see the Heiken-Ashi reversal candle, but this negates me from being able to take that. I got to wait for at least one more day on this to take that trade, right, on Marvel. So here's another one. Here's one. It's NTR. And we're looking at Heiken-Ashi candles. You see the Heiken-Ashi reversal candle? See the flat bottom? After basically a bunch of chop, and it's all green. This becomes a prospect for Monday for a swing trade, or to enter as a swing trade on NTR. See something that maybe people know about Kroger KR. Kroger, nice one. See, green, flat bottom reversal candle, beautiful swing trade setup on Kroger right here. Right, this is a nice one. So that's what they look like on the bullish side, and that's on the daily chart. And you're going to get these on the 5-minute chart as well. But I'm just kind of looking at the dailies for right now. Let me show you a couple of potentials on the short side. Get this thing to work. There we go. All right. We'll try to find something that doesn't have a big, huge earnings gap on it. Like FedEx. FedEx is a good example of a bearish setup here. Right. So you see how it's moving up pretty strong. Look at the nice move up here on the daily chart. See, if you were trading this swing trade on a daily chart, this is where you would have got in, right here on this high volume candle. You could have ridden it all the way up here. But now we're getting a bearish Heiken-Ashi reversal candle, and both of them, multi-time frame and current time frame, are both yellow. Right? This tells us we can trade this to the short side on Monday. We just wait to see how it opens on Monday. But definitely, that's a big Heiken-Ashi reversal candle, big volume and flat top. Right? So you might want to write that down as a potential for Monday for a short. Let's see, you got anything else? Yeah, triple M was a good one as well. It's actually a good one short yesterday. There's triple M, same thing. Now we've had, you see the Heiken-Ashi reversal candle actually started here. This would be considered a Heiken-Ashi continuation to the downside, right? Because we've already been in a downtrend, then we start getting wicks and tails. Now we've got a flat top, and we've also got a big volume in this thing, right? And if you go back, I mean, you can look at what's happened in the past here. You can see the Heiken-Ashi reversal candle here that you could have followed down as long as it stayed below the 8 exponential moving average, the white line. See the big volumes, you take it down, down, down. Beautiful, that's a beautiful trade right there, intraday swing, for a swing trade. All right, and let's see if we can find anything else here. Oh, the banks are really weak. Union Pacific was another short one yesterday, so take a look at that. So this is what they look like. Now, you look at Union Pacific, and you have to understand here. Look at your momentum indicators. See that? Bearish, bullish. This has been too strong for too long. The institutions are not really selling this across multiple time frames yet. So I wouldn't take it. I wouldn't be taking UNP because of that. So this is the criteria you use. You look at Heiken-Ashi reversals, then you look at your SPY super system and identify whether that stock is a strong candidate based on what the institutions are doing. All right. So that's what Heiken-Ashi candles look like, and that's how you use them. Let's look at a couple of charts for 5 minutes so we can see Heiken-Ashi on the 5 minute. A couple here I want to look at, and then I'm going to show you. Well, let's look at Kroger on 5 minute yesterday. We just talked about Kroger. Let's go back. So this is yesterday's trading. Go back to the open. All right. So here's Kroger. And we actually traded this intraday yesterday. And when I took it is, we took it right here. See how it went bearish, bullish, it went bullish right there. This is where we took the Kroger trade, as it broke above the VWAP and the 15 EMA right here. Now these little arrows here that the SPY super system puts on the chart, those are called pop symbols. Pop out of the box. Those tell you that the stock not only is it moving up, but it's breaking out of compression. So this is where we took the Kroger trade right there, on that blue candlestick, on that blue indicator right there, as it broke above here. But we took in the money calls. This was not an OOMCAT trade. This was a regular trade, because you notice the candlesticks are not white, they're green, right? That makes a big difference as far as which strategy you use. So we used in the money calls and that, and we had a nice run in that. We made about 30% on that stock, right? And if you look at something like the SPY on yesterday, it was almost untradeable, except for the first thing in the morning. Big move down, but look, see how it was up and down, up and down, up and down. You notice the colors keep changing back and forth. This was a short setup right here, late in the day. This was like after 3 o'clock. You got a breakdown here below the VWAP. You could have taken it short here and rode it down for 2 or 3 candles, but it was very, very late in the day, and I didn't touch it. All right, and one other thing, let me take a look at Palantir. Whoops. Palantir's here. So here's Palantir yesterday. Here's the end of the day. Here's where we traded. There was a few opportunities in Palantir yesterday, but it was fairly bullish all day long, but chopped around a lot. But you had a couple of entries. This was probably the best one right here, as it moved up with some high volume candles. This is where we actually took it. I took a trade in this very quick. High volume, high volume, high volume, flattens out, take the trade off. Okay, and so anyway, that's what the Heiken-Ashi candles look like on the daily and on the 5 minute, and how to use them to identify a trade, and then use your indicators here to make sure you have the institutions in that trade with you. Okay, so let me switch back over here. All right, so those are some Heiken-Ashi reversals. Again, here we go with the color codes for the SPY super system. We've already covered that. All right. Now, I did update the SPY super system chart layout recently, and I optimized for clarity and precision. I added the 8 EMA, which I've showed you. This provides improved signal confirmation and trade timing for both entries and exits. The 8 and 15 work together. The 8 exponential and the 15 exponential moving average. Typically, if the stock's coming down through the 8, it's probably going to support on the 15 and bounce. So you can take that into consideration in your trading. Then I added these high volume candles that I've showed you, aligning that with the SPY super system current momentum indicator for bullish or bearish. It increases the probability of success and larger profits. And this is where the SPY super system and the OOMCAT trades come into play. This is where we use the SPY super system and the high volume candles determine whether we're likely to take an out of the money put or a call or an in the money put or the call. All right. All right. So using the SPY super system indicators in conjunction with high volume candles to find the best entries. Again, high volume candles are white for bullish, high volume candles are yellow for bearish. Right. And this high volume candlestick is, as I mentioned earlier, this is really important. This is going to improve your edge dramatically on trades. All right. So again, we've already covered this. There's the SPY super system right there, and we've seen all of the indicators. All right. So this is what when we talk about the process. This is the process. High probability trade setup funnel. This is the process I go through when I'm looking for a trade. First thing I look at is if it's going to be a swing trade, I look at the daily chart. If you're going to go long a trade, the daily chart has to be bullish. And your SPY super system has to be bullish on the daily chart, right? And then I look at the 5-minute chart to align where I want to get into the trade, try to find a good level to get into the trade. Now for intraday trades, you don't have to worry about the daily chart. You're just going to worry about the 5-minute chart. Again, we want to trade with a trend if there is one, both the stock and the market. If you've got a bullish market, and you've got a stock that's bullish and it's outperforming the market, that's probably one of your better setups because you're trading with the market trend and with the stock trend. And that's what's called context, right? The SPY super system must align. This is a deal breaker. If the SPY super system does not align, if you're going bullish and it isn't bullish, like on a 5-minute chart, you have to have a bullish current time frame momentum. And a swing trade, you got to have a current time frame and multi-time frame momentum. Both of them need to be bullish. So this is the deal breaker. This has got to match up because we only want to be in there if the institutions are in there. Relative strength, relative weakness. As we talked about before, this is not RSA, but this is whether a stock has relative strength or relative weakness to the market, to the SPY or the Qs. And then once you found a few of those, then you try to enter near support and resistance. This is the process you go through. This is the criteria. This is the whole criteria that we use to find these trades. I mean, there's some other technicals that you've got to look at. If you're getting into a trade, how close is resistance level to the upside? Do I have enough room to make profits on the trade? Okay, there's the OOMCAT strategy. This is the out of the money catalyst. This is a new strategy that we've run since November 17th is when I started this. And that's when I started testing it. Because I never recommend out of the money calls and puts because they're losing strategy generally speaking. If you use out of the money puts and calls without specific criteria, you're gonna end up losing money. I mean, it's obviously it's something that's been tried and done many times, and I can tell you it doesn't work because I've tried it before. But the thing with out of the money puts and calls is the return on investment is really big because you're getting in relatively cheap compared to in the money calls and puts. But the setup is going to be very strictly adhered to, right? So this is the OOMCAT, right? And these are the results from November 17th to February 11th. And these are my trades. I can't call these out in the room. I can identify them when I see them, but I can't actually print them in the room or post them in the room because it's too fast, right? But I did have 170 wins and 27 losses, 86.2% rate, which is sticking with right through even this past week. Profit factor was 5.21. If you don't understand profit factor of 1 is break even. Profit factor of 2 is extremely good. Profit factor of 3 is extraordinary. Anything you can have, if you have a strategy that produces a 3 profit factor, that is really high. This was just producing a 5.21 through to February 11th. So if you were putting just $500 into a trade, most of the time I talk about 2,000 into a trade, put 5,000 and 500 into each trade, you would have made about 17,900. That's what I did on the trades I took, 17,900. Now here it is through the 20th, all right? So I haven't updated it through last week. This is the 20th, 236 wins, 236 trades, 204 wins, 32 losses, 87% win rate. Notice it's sticking right around the same way, but the profit factor went up to 6.08. And that's because of a couple of the trades that we had, which I'm going to show you that jack that thing up. But 500 in each of these trades from November 17th to February 20th, $21,740. And that's a pretty small risk. But again, I have to emphasize how important it is that you have to stick to the criteria. I've got a webinar on this thing or a video on this that you have access to if you become a member. that goes into the exact setups that you've got to use. And I'm going to show you some here in just a minute, so you'll be able to see that. All right. So here's some examples of some OOMCAT trades, and I'm going to show some live. This was an OOMCAT trade that we took not very long ago. When was this? February 20th. This was an OOMCAT Oracle trade. It's a 5-minute chart, right? This is the SPY super system. This is the trade we took in Oracle. Now, we wanted to go short. You see how and we're only looking at this indicator here. I'm not looking at this indicator. I'm just looking at the current time frame momentum because that's what I'm interested in. All right, for anything that's intraday like this. Here is a high volume candlestick breaking down below the 8. This is the 8 exponential moving average, the white line. VWAP up here, 15 here. The 8's below the 15. What does that mean? It's a bearish trend, right? So we're taking the breakdown here. See the arrow pop out of the box? So we're breaking compression with a high volume candle. When the institutions are selling, we're taking the trade right here. So this is where we get into that trade. All right, and you follow it down, follow it down, follow it down. It stays below the 8, stays below the 8. This is where I get out because the candlesticks were getting small. Some of the momentum, they were still high volume, but the candlesticks was shrinking. So I took a profit there. So we're in on this one for $72 a contract, out for $1.25 or $125 a contract, 74% profit. 10 contracts in that produced $530 profit. So again, this is a pretty quick trade. So it's 5, 10, 15, 20, 25, 35 minutes for that trade. And this was one that we had on Friday as well. This was on the 20th. This was a massive trade. This I think is my best OOMCAT trade to date. But I want you to see the structure here, so you can see how you take advantage of this. Right. So this is an OOMCAT trade on Frog. We get into this trade for $30 a contract. Right. They're out of the money. I mean, it was trading at about, I forget, it was trading at 45 or something. I think I had 47 or 48 puts on this thing. I'm sorry. I was trading at about 45, and I took, took about 39 puts on this thing. It hadn't got anywhere close to it yet. But this is where I took it right here. As you can see, where you see how it's went from bullish here. See how it went yellow, bearish. This is where I took it. High volume candle, breaking down below the 8 in a downtrend. The 8's below the 15. The institutions are selling. I take it here and I ride this thing down. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. I get out right here. I actually left some money on the table, as you can see, but this is where I get out of that trade. 566% profit. So if you get into that trade for 10 contracts, it would have cost you $300. It produced a profit of $1,700. These are what you can get. Now this is not normal. I mean, this is not like 50% of your trades or something. This might happen 10% of your trades. All right, but if you following the fact that the high volume candles were here, if these were not yellow, I couldn't have taken this OOMCAT trade. I would have had to take in the money puts, right? Because I got to have that volume telling me that the institutions are driving this with power, right? And that's why this OOMCAT strategy is so very, very successful. All right. So I'm going to look at some live charts here for OOMCAT trades and SPY super system trades. Again, this combination, right, of the indicator, the SPY super system indicator for current time frame momentum, this combination, along with the high volume candlesticks, that tells you when the institutions are buying and selling a stock or an option, but not only when they're buying and selling it, but they're doing it with major volume. And this is a very, very big deal. Don't underestimate how important these high volume candles are in determining whether that trend is going to last. All right, so again, I'm going to show some live charts so we can see the exact setups used for the SPY super system, which is typically for indexes or for stocks that are using in the money puts and in the money calls. And OOMCAT, which is using out of the money puts and out of the money calls to generate massive ROI, but you've got to treat it completely differently as far as your exit is concerned. All right, so again, these extremely high probability trade setups, they use the SPY super system indicators and the high volume candles on a 5-minute chart to identify these setups. And as I said, this identifies not only the institutions coming in, but they're coming in with big power, big volume. And again, both of these very powerful intraday trading strategies produce win rates of over 85% and profit factors of in excess of 4 on both of those right now through the current time. The SPY super system trades from going for this 4.0 profit factor in it. It's been going. We've been doing this for about 2.5 years. The OOMCAT trade only started in November. Okay, so let me go back and show you some of these. Let me go to this charts here. Back over here. Okay, so here again, I showed you one of these already. This was a Palantir trade that we took on Friday, right here on Palantir. This was a pretty nice trade. I'm just noticing it was about a 34% winner on these 3 candles. This is where I get in. I'm looking for a break, and I'm looking for a break. Now you could have taken it here within the money calls and puts. I took it with an out of the money call right here as this candle went white. I think this is where I first noticed it, and I followed it. It followed it up, and I just get up. I stayed in it, get in it, out. That's a 34% gain in 3 candles on Palantir. But you got to be quick on these, because I mean, if you get any kind of even a compression on an OOMCAT trade, it's going to reduce the premiums pretty quickly because you're out of the money on them. So you got to be careful. And that's the difference between the OOMCAT and the SPY super system. All right. So let's take a look at another one here. We had AAOI. This was one I had yesterday. This was a tough one to trade because the premiums were very, very costly on this thing. But this is where we took it. I mean, I think you can probably see where we took the trade. See the institutions selling? They switched to buying right here, and then see this candlestick right there. All right, this is where we take it on this high volume candlestick right here, and take it up. And you can see that you see how it's going above the VWAP right here, breaking above the VWAP. So we're breaking above VWAP. So there's buying its at resistance or buying its support. We get there right there, and then we take it to here, to here, to here. We ride this thing up, and then you can see right here where I get out. All right, this is why you can see I get out, but this is where I get out because now these candles are getting small. Now that we get in at 10 o'clock, and I get out at time to get out at right over here. See how this went yellow, by the way? I got out right here at pretty much the top. I get out of this candlestick, and that was a 95% winner. The options went up 95% out of the money on these right here. But you have to be quick, because if you waited and let these go like this, if you're not out of the trade, they're going to go down much faster than they would if they're in the money. But that was a beautiful trade at AAOI yesterday. I think you can see it, right? There's the blue candle. I mean, the blue indicator. It goes from selling to buying, and you get big volume coming into this thing. You got to take it, right? And then it kind of chopped around. Notice it didn't do much anything the rest of the day, except there was actually an opportunity. I didn't short it, but there was an opportunity to short it here. But I didn't do that. And at Kroger, I showed you already, and I showed you why that one was right over here. Why this was not a OOMCAT trade. This is the difference between OOMCAT and SPY super system. When it went to blue right here, we take it as a long because it's breaking above the VWAP. It's above the 8, and it's going above the 15, and you pop out of the box. But notice the candles are green. These are not white candles. That means the institutions are coming in, yes, but they're not coming in with the force that you would want to have them come in if you wanted to take an OOMCAT trade. All right, I hope that makes sense. And again, I have this all laid out in the video, but anybody who's an intraday trader, if you can learn this OOMCAT strategy and use this OOMCAT strategy, it's going to change your life. It's going to change the way that you look at trading. It really does. Let's see what else you get. Oh, Walmart. Okay, I think I'll have to go back a day for Walmart, just so you can see examples here. And Walmart was on the 5th. And about 10 o'clock, I guess. Yeah, there it is, right here. Walmart. All right, so this is where we took Walmart. 10 o'clock, right there. There was the Walmart trade. Came down pretty hard. It was bearish. It broke below the VWAP. At 10 o'clock, institutions are selling. Take the trade right here as it breaks down below the VWAP, either right here or right here. On high volume candles with a pop out of the box, you take this. I wrote that down, and I get in at 10, and I get out at 10:30. So I get out right here on this candle. And that produced another 40% win right there on Walmart, using out of the money. And I use out of the money because the candlesticks are yellow. Okay, so I hope that helps a little bit to understand how this strategy works and how the SPY super system, how powerful this thing is. Okay, so again, we've already looked at that a few times. And this is a couple of trades we had. And this was an NVIDIA intraday trade on NVIDIA. Again, you can see how it moved up right here. See how when selling to buying, this is where you buy it. Again, so I'm just trying to show examples so you can see how the indicators, how easy they are really is to line these things up. There's a SPY trade right here. This is a SPY super system trade to the downside. See, it went green to yellow, went to bearish, broke down below the VWAP. This was before we actually had high volume candles on here, I think. And yeah, and it broke down below here. So this would have been when I would have taken a SPY super system trade in, buying in the money puts on the SPY. All right, another one here, and I'm just showing you these so you can see the setups and how good these indicators are to tell you when to get in. And you're using the with the high volume candles, that really even increases the profitability tremendously. Is there any Paul wants to know, is there any time of day that the OOMCAT trades occur? What does that say? More than any other time? Not really. I mean, first of all, in the morning, I shy away from any trades before 9:45. I want to have the market be open for 15 minutes before I take any trades, because you get a lot of high volume candles right on the open and right on the close, and that they can be a little bit misleading. So I'm usually going to wait till at least 10 o'clock. But these things appear almost any time. It's really, really hard to say because if I go back and look at my OOMCAT trades, they occur at 10 o'clock, they occur at noontime, they occur at 2:30. They're spread across the whole day. And you know, if you're looking on the scanner that I've got here, that I had on the SPY super system, that has cascading up and cascading down, as the stocks appear in that you can just click them and it'll show up in the chart, and you can see whether you're getting high volume candles or not. Okay, so there's a SPY system. So this is just kind of a little humor here. This is what most retail traders look like when they're trading, right? They've jumped into a trade which they shouldn't have jumped into because they, for example, FOMO. They jumped into Netflix because it had moved up 6% this morning. It's ripping up, and they're reading on X that everybody's jumping into it. So they're afraid I'm losing money. I got to get in. So they get in, and they get in. Where do they get in? Pretty close to right to the top. And this is what happens. They look like when it shifts and heads back down the other way. All right, and that makes a pretty horrible trader. This is a person who's running under a lot of stress, probably has a bottle of antacids next to him, and this is what you don't want to be. You don't want to be an emotional trader. Very important. This is more likely what it looks like if you've got a good strategy and you know how to follow it. Hey, Paul, do I have any favorite stocks or indices that you watch more than other times? Well, you know, with the OOMCAT strategy, what I like on the best, all right, is I like stocks that have fairly good volatility. Stocks that you can make a lot of money on are stocks that move really a lot. Now the options are going to be a little bit more expensive, but if you can get into it like a Tesla trade or an APP trade, those are pretty. That AAOI was another good one. But they're all good. I mean, even the smaller ones like Procter & Gamble or Kroger, you know, they're not as volatile, but they still, when you catch them, when the OOMCAT trades are moving, in other words, you get volume coming in, they're going to move, and you're going to make some really, really good money. But I mean, some of these trades like that trade on Frog, that was a really volatile stock. So its candles were coming down $2 or $3 at a time, and those are the best ones you can get. But you got to be careful, because if they reverse on you, they can go back up against you really quickly too. Okay, but that's about, every day I'm looking for them, but I like stocks that have quite a bit of volume in them. Obviously, we want to have some volume in these things as far as the options are concerned. All right, so process precedes results, and the process was what we went over. I showed you what that was on that funnel, right? You got to learn the high probability criteria and strategies. That learning that comes before focusing on your P&Ls. All right, the results that you're getting is not telling you whether you get a good strategy or not. There's going to be a lot of people that'll take a trade that's a bad trade. They're going to make money on it, and now they're going to think that trade works all the time, and they're going to end up losing money because they're trading a strategy just because it happened to work once. They stay in it, and you can take a good trade that goes against you and say, well, that's a bad trade. I mean, this is what you run into all the time, right? I mean, if I've had people that are in the room, we had 7 winning trades in a row, and then one of the trades lost, and they left and they went and looked for another strategy. See, this is one of the big problems with retail traders. If they have a winning strategy, the methodology that they know because of the results works over time. They're always looking for something better. It's basically looking for the holy grail, looking for something that can't lose. There is no such thing. If there is no such thing, you're going to take losses. You have to suck it up and take the losses. But that's part of trading. If you jump from strategy to strategy because you're not satisfied with the strategy, you're never going to get on one that works for you long term. Okay. The alert service, by the way, is designed for day trades and short-term swing trades. And again, we haven't had a lot of these lately because the market's not really tradable for swings. We've got some. We had some winners here recently, but not as many as usual. Designed for traders who can't watch the market all day. You're going to get real-time alerts on the highest probability trade setups. What does that mean? That means institutions are in the trade and the market internals are bullish or bearish to correspond with the actual trade. And then I look at technical analysis to come up with what I think is the best trades to take. All right, this is my equity curve for 2025. This is based on the trades that we posted in the room, $2,000 in each trade. This isn't really my equity curve. My equity curve is a lot different because I get OOMCAT trades in there. I get SPY Super System trades in there that aren't included in this. These are trades that were posted in the room and alerted. Okay, I'm going to take a look at the results. I just kind of want to go over the results in this. And remember, it's the SPY Super System that's driving these results. I don't take credit for all these results. I mean, I'm trading this system and I developed some of the parts of it. But it's following the institutions that what makes this successful, and then looking at further down into other criteria. All right. So again, this is what the room did. 2023, $60,208. If you put $2,000 into each trade, and again, this is just a number that we use. You could be using 500, you could be using 10,000, but I have to have something that I use every month to come up with figures to actually give you profits and losses that are consistent, right? So we did 60,000 in 2023, 2024, about 55. And again, keep in mind that your results that you get profitability-wise, especially for swing trades, because most of these are swing trades, are going to be related directly to what the market's doing. If you've got a trending market, you're going to make more money than you do in a choppy market. That's just the way it is. You can stay in a trade longer, you can make more profits. Choppy markets are going to cut your profits down. So depending upon what the conditions are at any point in time during the year, months are going to change because of how long you can stay in the trades. 2025, 55,113 is pretty much the same as 2024, right? So again, so you can see the consistency. It's again between about 84 and 89% profits wins. That's our win rate, and our profitability remains pretty much the same. All right, I'm trying to take this off pretty soon. This is something we did. It was at the time it was really pretty impressive because this was back last April when they put the end of March when they put the tariffs on and took the tariffs off. They're on one day, 2 days later they're off. We were only in 4 trades. We had 4 trades on in the room and on the alert service. These were all swing trades. We had Broadcom, we had Nike, we had Sarepta, and we had NNE. These were all the trades we're in. This is when we get into them. At Broadcom, we get in for $75 a contract, get out for 104, 39% profit. Nike, we get in for $285 a contract, close for $9, 216% profit. Very unusual for our swing trades. Very unusual to make that kind of money. That's not normal for us. But this is when they put the tariffs on. Nike plummeted because all of their products are made in Vietnam, and they were talking about a 39% tariff for Vietnam. It dropped. We took it as soon as it dropped down that morning. We took it off. Sarepta, 78% profit. NNE, 25% profit. This is more in line. 39, 25. This is more in line with normal. But the interesting thing here is the SPY was down 10% in 2 days. And the market was collapsing, absolutely collapsing, and we made really, really good money during that particular period. All right, so this was I have not done February yet. This was January to date. Didn't take a lot of trades. 13 and 2. That's a very low number of trades because the market is not giving us the ability to take any kind of swing trades. You get a lot of day trades, a lot of OOMCAT trades and SPY Super System trades, but I can't post those. So we call them out in the room and people take them, but I can't post them because I can't send them on alerts and I can't put them in the room. I can't write them out because they're too fast. But anyway, 13 and 2 produced 2145. This was January, February, March, and April of last year. Just so you can see the wins and losses, 84%, 89, 83, 81, 15 and 3, 16 and 2, right? 20 and 4. But look at the difference in profitability. 3,100 here, 3,800 here, 7,800 here in March. That was again, that was when the tariffs went on. And then 13 and 3, 49.92 in April. So this is going to vary depending upon market conditions. But you notice that the win rate stays pretty much the same. All right, this was we're back here in May of last year, and the reason I'm showing this is I'm not trying to brag about the results. I'm trying to show you what kind of percentage gains to expect on the trades that you take. Right, you're going to get 24, 20, 28. This is normal. 71, 50, 50 is pretty good. But notice you get a lot of 30, 40s, 18, 32. This is the percentage profits that you can expect, generally speaking, over time. Right, you're not going to be seeing 2, 3, 4, 500% in here. You'll see those on the OOMCATs, but I can't post the OOMCATs because I take those and I call them in the room, but I can't post them as an official trade because I can't alert on them and I can't actually post them in writing in the room. All right, so there was May 15 and 2. In the room we had 29 and 7 for $5,700 profit. June, I was on vacation in June of 2025. We only took 11 trades, 10 and 1. Small, fairly, it's a small number of trades. But again, I was on vacation. July, we really cranked up the number of trades. But again, I just want you to see the percentages here. And again, we do take losses. You can see the losses. I've actually had one losing month in the last 3 years. It was last September. I'm going to show you that. Right. So this was July, 30 wins and 3 losses, 16,000. This was our best month to date so far of profitability, almost $17,000, which is crazy for small traders like us putting 2,000 into a trade. August, 84, 59.60. September, this was 2025. Again, 84%, 21 and 4. So you can see those October through December of 2025, 83% win rate, 45 and 9, only 47, 48, small money because the market was so bad. This was September. This was my losing month, September of 2024. I just like to show this because when you go to webinars, you're always seeing all these, these people standing in front of houses with Lamborghinis and mansions and all this stuff. And listen, it's baloney. Right, to be consistently profitable, you got to grind it out. You're not going to be turning $5,000 into $5 million like somebody may tell you, right? But this was a losing month that I had, and I just want to show that because they occur from time to time. Very rare, but they occur from time to time. And then we had 8 and 5 here, 62% win rate. I mean, I was walking around with a bag over my head because I didn't want to be recognized. And that's awful. And lost 1786, lost 295 in the room. But we bounced right back. As from here, we went back up and made 7,000 in October on that. But I just want you to be aware it can be losses. All right, and this is the alert service. This is kind of what an alert looks like. This was one we sent out at Nike last year. I just want to show you what they look like. Date, the instrument Nike, buy the April 11th 67 puts. All right, so you're buying calls. April 11th, that's the expiration date. 67 puts, that's the strike price, right? So this is buying puts, so you're short here, right? You're buying the April 11th 67 puts for 285. Then that'll be the whole alert. Then you'll get another one that'll show the original alert plus the sell order for $9, and then they're going to be sold for $9 and they close the trade out. Now there can be others. If I adjust the sell order, there would be in other alerts, but that's what it looks like. Okay, all right. And how do we achieve such stunning results? I think, again, we follow the process. We're able to identify when institutions are driving a trade and when the market internals are heavily bullish and bearish. And, we've got these high volume candlesticks now, which really makes a huge difference. And again, how do we find these? I've kind of showed you that. Momentum, trend, we do look at money flow. All of these things are looked at in the SPY super system to come up with those colors. Right, and here's the trades again. I'm not going to spend a lot of time on this. This is what it looks like. This is what you also, if you buy the software, you get a template that looks like this. You get a template that looks like this as well. This just shows the current time frame. This would be for folks who only want to intraday trade. Just want to intraday trade and they're just interested in what the current time frame momentum looks like. Right, and there it is right there. And again, the other indicators are on there. Again, here's a Heiken-Ashi reversal candle on the SPY. This is where we took the trade. Notice it was green, buying, selling, red. I think I've shown this enough. Hopefully you can see this, how easy it is to see. And again, if you don't have the SPY super system, but you're in the room, you'll see this, because this is what sits up in the room all day long. And I'm in there all day long talking about it. So this was a nice reversal here. And look at where you take this right here and see how it just keeps going down, down, down. This is before I even had high volume candles on it. These probably would have had high volume candles, which even would have been more impressive. And again, you can see this thing moving down, and I don't know where I get out of it. It just kept going. I waited until it started to bottom out. SPY super system, I'm not going to spend much time on this. This is the intraday trades for trading the Qs, the SPY, the IWM. That's all I traded here. I didn't trade stocks here. I was trading just the SPY, Q, and IWM when I started this a couple of years ago. But in July of 2024, 16-0. In July, August, 56, 6 and 2. See how many trades there are. You get a lot more setups like this. But again, I can't. The results, these are my results. I can't post these because they're too quick. But I do show them when they're coming up in the room, and I have a strategy video that you can read, and you can learn how to do this yourself. All right, September, October. So anyway, I've never had a losing month with a SPY super system, and you've seen what the OOMCAT does. So this is a pretty impressive strategy as well. This is trading off the Qs, the SPY, the IWM. You can also trade futures off of this. You can also use this for trading futures. It works fine. What prop firms can you use this with? I don't know, Andrew. I don't know what prop firms allow you to use these kind of strategies. I would assume most of them do, especially if you can trade futures, because most of them all let you trade futures. But that's something you'd have to take up with a prop firm. I don't know. I don't use prop firms. I just trade with my own money. By the way, all the trades I post that I take, and I send out alerts and everything, and all the ones I call in the room, I'm taking all those trades with my real money in my real money account. I'm not using a SIM account. I'm not using a paper account. I'm trading with my real money. All right, and sometimes I'll say, okay, I'm taking half size. Sometimes I'll say I'm taking 2x size. But I'm trading them all with my own money. So if you're in a trade and you're losing money, a lot of times somebody in the room says, we're losing money on this particular trade. And I say, yeah, I know, I'm in the trade. I'm aware of that. Okay. So again, I don't want to beat a dead horse. Here's your SPY super system again that we looked at. And these are more SPY super system trades that work. This was produced 220 a profit. You can see right here, this was an old one. It doesn't have the high volume candles, but selling, buying right there, right? Nice trade, $220 profit. Here's one on the SPY that made $90 profit, just lasted 2 candles. And again, here it is with the modified indicators here that just has the current time frame momentum on there. Okay, all right. And these are some of the long-term trades. This was a trade we took in the room. This was supposed to be a swing trade. It was a line. We took it here. Again, as you see, it went from green to yellow. We took it here, breaking down high volume, not high volume, pop out of the box. This was before high volume candles. And it was going to be a swing trade, and I put it out on the alert, but I took it off after an hour because we were up 51% on it. So that worked out pretty nicely. This was URGN. Again, this was a daily chart here. Took it right here, get out right here. These lines should be on there. That VWAP. Right, here's NVIDIA. We took this is what's called a PBO, the pullback opportunity as the stock moves up, pulls back right to the 8, right to the 15, and then bounces, and that's where we took the trade. Right, there's one on SMR. Here's the Nike one I told you about that we had made so much money on, 216%. This is where we took it right here on 328. Look at the selling. Institutions just doing nothing but selling here across the board. And so we took it here. We actually were up money that day, but we held it, and here's the gap down on the Darris. Took it off right there on the gap down. Didn't wait around. It gave gaps of gifts. All right, Sarepta, same thing. Again, this is another one we had on that at that particular point in time. And this was a green. This was a profitable one on HIMS, 2.7. I'm going to change some of these fairly old charts, but you can see that the institutions are buying the heck out of this thing. All right, so that actually covers the video of the webinar. I could have gone into more details on some of these results. But I wanted to use live charts. I like using live charts, and I can actually show you all the indicators with a live chart in real time, like I did on the Thinkorswim platform, the SPY Super System platform. So again, here's our swing strategies. Here's our intraday strategies right here. All right. It's like intraday. This thing is, if you can get this down, you know, you're going to be amazed at what this can do. Again, it's really pretty spectacular. All right, so these are the offers that we have right now. This is for the trading room and the text alert service. We've got one for the text alerts in the room, and then we've got another one for the actual software. Right, so this is the live trading room and the text alerts. Quarterly membership, you get a 2 free-week trial. You get the text alerts. You get the trading room, of course. You get access to my videos. I think I have 32 videos out there on all the indicators, all the strategies we use. There's one on the SPY Super System. There's at least one. I think there's 2 now on the OOMCAT strategy. Everything all the strategies we take, there's videos on it. And then you get a Discord chat access. We've got a Discord room with 2 other professional traders in there. This quarterly, after 2 weeks, goes to $396 for a quarterly membership, right? This obviously is a lot better deal here. This is the annual membership, $14.98. Same stuff. Text alert service, trading room, the videos, and the Discord chat room, $14.98. Right? So you put the code of save 50%. This is on the over here on the quarterly one, and then this is what's called the one-time payment. This is the lifetime. If you want to get the room in the text forever, you can go in the room whenever you want. From now till eternity, you can take the one-time payment, $19.98, only $500 more to get this. You don't have to renew from year to year, but it all has the same stuff. All right, so that's the live trading room and the text alert service. This is the actual software. This is a SPY Super System software. It gets installed on the Thinkorswim platform. You don't have to trade on Thinkorswim. You can trade anywhere else. I don't trade on Thinkorswim, but this is where the indicators go. Right, so this is an annual membership. This is 1 year. You get the SPY Super System software. You get a month in the trading room. You also get the scanners that I showed you briefly. You get all of the videos, training videos, and if you want, Rightline will install it for you. When I had it put on, I had them install it. They'll take over your machine. They'll install it. It's going to look exactly like mine, just like it is on my machine. And if we do any updates, which we've been doing lately, you're going to get all those updates included for the annual membership, $14.98. Use code SAVE500. One-time payment. You own the software forever. This is like the best deal I think you're ever going to find for this software. Less than $2,000 forever. So you have it, and you're going to get the software course. You're going to have 3 months in the room, the live trading room, right? So that gives you 3 months as part of that. And then you get the scanner, of course, and same as over here. You get the master classes, all the training, and you get them to install it on you. That's save $1,000. This is really a really good deal for that software. That software will, I think, if you use it and understand it, it's going to change your whole way of trading, and it's going to change your success. I mean, listen, there's no guarantees on trading. We all know that. I can, you're trading your emotions. You're trading. You're not able to stick to, as I said, you're not able to stick to the disciplines, etc. That's going to make a difference. But this thing will make a huge difference in your trading. You get the high volume candles in there. You got all of the indicators, so it's very impressive. Okay, and if you go to the chat box over here, by the way, Rory's probably got those things loaded up here. Yeah, he's got the text alerts and the trading system loaded up there for offers. You just click on them. Gordon says with voice to text, you could have the audio calls posted in the room. Yeah, but I'm talking all the time. That's the problem. I'm not necessarily talking about individual trades. I'm actually answering questions, talking about different stocks, talking about technical setups, etc. So it'd be really pretty hard for me to go back and try to figure out, do I want to post this one? And you could have stuff posted. It would make a huge mess in there. It typically, and first of all, when you post it from voice to text, by the time it posted up there, the trade may be already well underway. And so I have to let you know that I'm seeing a trade. I'm looking at this one. Here comes the high volume candle. I'm in. And you have to move quickly on this. And it's very, very difficult to try to post those. Intraday trades like this are so fast that, yeah, you could be in it for a half an hour, but you can also be in it for one candle. And then I got to say, I can't say, okay, I'm in here, I'm getting out here. I try to do some play-by-play of that, but it's really hard. It's really hard to do during the day when all this stuff is going on at one time. But I appreciate the idea. Okay, so again, there's your SPY super system. There's a trading room and text alerts. I did a little analysis of the amount of money that you put into the room or the software. This is your annual subscription to the room, maximum $1,600. That was if you were doing the quarterly. Other than that, it's cheaper. Average trade size 2,000 per trade. It's 40x ROI is what we're averaging right now. 40 times your ROI, so 40 times your $1,600. So if you're putting in less than that, it's obviously higher than that, but that's per year. So the annual profits have exceeded 40 times the subscription cost, and that's pretty impressive to me. Again, high ROI, simple math, proven results. Past performance is not indicative of future results, please. There's no guarantees in trading. Telephone, Cesar? I'm not sure what you mean. Telephone. If you can maybe clarify that a bit for me, I'll try to answer for you. Okay, very good. All right, everybody. So listen, those are the offers. The software is excellent. The trading room is, I mean, I don't want to brag about the trading room, but I'll put our results, consistent results up against anybody pretty much with the strategies that we do